Joe here. I just wanted to go over a few things with the Bollinger Band theory that I use here, just to kind of give you an idea how I find good entries, good exits. This is a 21-day moving average here, as you see, and this is actually the red line, 200-day moving average. I just kind of put that on the chart. Actually, the 100-day as well. I don't want to confuse more than I had to starting out here. But the 100-day kind of gives me an idea where the market is, if it's below it or it's above it. Obviously, it's starting to become pretty bearish. Selling's starting to intensify. Once it crosses below the 200, once it goes above a 200, it starts becoming a little more bullish. Buying starts taking over. So, just wanted to give you an idea. Just have a look at any chart, any market. It's a good way to just kind of see right off the bat what's happening, what's going on. This is a 4-hour chart, so keep in mind this is a lot of time here. This is like the 27th of November. This goes all the way back to 7th of November. So about 20 days of trading here with these 4-hour bars. I just wanted to show you a really simple way to trade. You could literally check your chart every 4 hours, and you can make some pretty good buy and sell decisions here. And that's what I'm driving at here. You don't have to overtrade. Definitely a mistake I've made in the past. I'm just trying to help anybody who learns from me. Obviously that's not necessary, but that's why a lot of people run into trouble when they start trading and they start losing money because they start overtrading. They just get into it too much. Better to take a step back and learn as you go here. Get a demo account. Just kind of pointing out some of the safety factors here. Trading, you want to just start with $10,000 thinking you want all. But let's say, how would you utilize this system? Is probably what you're asking here. Well, another thing I add here is called the non-lag EMA, and that's the adjustable moving average. It basically filters out a lot of noise in the market signals, price, and that's a good thing. I've got it here under my custom indicators. Here it is. Okay, and then I usually put this on what we're talking here. I put it on a 13. So there it is. It's a red-blue line. I'm sure you've all seen it here on my other templates. So when it turns red, you can sell. When it turns blue, you buy. So and here's how I incorporate the Bollinger Bands. If you were watching this here, keep in mind it's outside the price here right now. It's outside of the price of this yellow band, which is the first deviation here, the 21-day moving edge Bollinger Band, and that's the key to this. You want to get in this trading range here. That's how you make your money. It's easy money. Once it closes inside of it, it'll go to the other side, and that's the theory behind it. If it doesn't go to full the other side, it'll go to the middle. A lot of times you can just do good, just being safe, taking your profits here. So in this case, you want to be looking for the blue line to be turning blue too. Taking it here is probably a little dangerous. The market's in a downward momentum. I would probably pass on that. All these closed, not convincing enough here to take a trade to the upside here. Now, all of a sudden, in this band here, it does trade on the inside. It closes on the inside. So that's a buy signal right there. And you would be buying at the beginning of this time frame here, right here. Now, if you see that the line had just turned blue. Now, those two come together. That's a really good buying opportunity. And the higher the time frame, the better that signal is going to be. So that would be pretty good buying signal. So let's say we bought right here. That's a New Zealand dollar. 81.45. We closed her out here. This bar here would have closed at 81.59, 60, say. Not a big hit. I mean, we're talking New Zealand dollar. This thing doesn't. You can go for hours and go up 10, 15 points. But I'm just trying to use this as an illustration here of how you use it. Now, if this was the euro or the euro yen, you're looking at probably 30, 40 pips average. So I mean, in a few bars. But that's how you can accumulate some points here, just a little bit at a time. But you're only have to check your chart every 4 hours. So you keep in mind the work as opposed to the really get into it. Yes, you could trade the hour and be a little bit more aggressive in the big picture. A lot of times it's better just to accumulate little amounts as you go here. I literally trade probably 3-4 trades a week, and that's it. And I do it in my spare time, and I use hour and 4 hour charts, and that's how I accumulate on average 100 pips a week part-time. So I mean, if you're trading a $5,000 account and you were being conservative, that'd be $250 a week. So I mean, not bad for trading part-time. Just looking at the 4 hour chart. But just wanted to give you an idea of what I do there. When the bands tighten up like this here, that's a sign that the market volatility is drying up, and it's going to go one way or the other. It attempted to go the upside, it stalled at the 200-day moving average, and I would almost be tempted to look to sell here at a good point. And when it crosses this line here, if I happen to catch it, or I can even put a sell order in right here, a sell stop. That would have been a good idea here around the 81.75 mark, and sure enough, it would have got hit. You would have been in it. It would have taken you below this here, and from 81.75 to close on this bar here of made about 75 points in roughly 12-hour time frame. So I mean that's a good trade. That's the kind of trade you want to be looking for. That's why using the 4, you're going to get those low risk, high reward trades. So yeah, just keep in mind it closes on the inside here of this band. You want to buy. If it's the other way around, you're selling. In this case, be closing on the inside of this top upper first deviation band. So I just want to get you an idea here. How you can find the good trades when it turns blue, and it's also closing on the inside like this bar here. Excellent buy signal. This isn't the best sell signal, but it's a good one. It's turned red. It's a sell signal. If you sold, obviously you would have made some money. 50 points within 24 hours. So look at this. Just 1, 2. There's 3, 4 good trades here in a matter of a few days. So I hope you get the idea here. How you can use Bollinger Maths to your advantage here. Just look at a few simple moving averages. As you see, this line's critical. Wait till that turns the color of a trend that you are anticipating to go with. This is just a real simple example. New Zealand, U.S. dollar. Probably best traded 4-hour and daily charts. So that's about it for this lesson here. I think anything else here, I'll keep you up to speed. Thanks for listening, and looking along with me and trying to understand this. It doesn't have to be that complicated. There's always a way to make money the simple way, and usually that ends up being the best way. So.